Welcome friends. Welcome to our course of Financial Analysis and Planning. It will be a fascinating journey indeed. Let me start by broaching the topic. We always hear about courses, finance for non-finance executives. But we have never heard about topics like marketing for non-marketing executives, production for non-production executives, operation for non-operation executives. No. Why so? I'll tell you a very interesting, nevertheless a bit funny to a catchline. The business of business is to do business. What does this mean? This means that the work of business is to do business. What does the last business imply? It implies creating value, making profit. I will discuss about two business models. One is a socialist business model and one is a capitalistic business model. When we talk about the socialistic business model, let us go back 5 to 6 decades post-independence of India, where we have to develop the economy. We have started huge public sector manufacturing enterprises. What was the objective of those companies? There are two objectives. One is a social and another is economical. The social objective was to provide employment, and the economic objective was to provide goods and services that will further the growth of the economy. On the contrary, when we talk about the capitalistic model, the main motive of that model was to generate profit. Now, what is the difference between two and which is sustainable and which is not sustainable? We have seen the socialistic model crumbling across the world, whether our neo-social models of India or USSR and China has gone to total capitalistic model. Why? The reason is that when we keep our objective of only social benefits and giving goods and services without the value addition objective, it fails. All our large white elephants of public sector enterprises of 16th and 70s were started with the motive of no loss, no gain. This was not achieved. From their birth, they started making losses and ultimately they had to be restructured to run the enterprises. But whereas, why profit is important? If the objective of a business is to generate profit, profit is giving you surplus. Surplus can be invested further for the growth of the company. Surplus can be distributed as dividend to the owners. Surplus can be distributed for social goals. So these are the objectives, when we talk about profit. Now, profit is actually now boiling down to finance. This is why finance is so important. Now, financial management, what is the objective? Objective is to improve the value of the company, increase the value of the company, which actually means increasing the value of the owners or the value of the shareholders' wealth. This is the objective of financial management. Whatever permutation, combination, long calculation, whatever we are doing, the main goal is to increase the wealth of the shareholders. So this is the crux of financial management.